Hello value investors, thank you for joining me. Today I want to talk about Asana and why I find that Asana is an interesting investment. So we're going to discuss what Asana is, we're going to talk about its revenue growth rates, then we're going to talk about the one blemish that I find about this company, then we're going to bring this all together and talk about its valuation. If you haven't done so already, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I tell you the stocks I own and why, and what I'm looking at right now that's quite interesting for me. You're welcome to do a totally free trial to see if it suits you. Okay, so let's get started. So Asana is a very interesting platform, okay? So it's supposed to make work easier, collaborative tasks easier. So if you think about, it's kind of like a very sophisticated calendar. You get to figure out who's doing what, when, who's responsible for what. So it's very, very clear, okay? So they got this little graphic here that they talk about that Asana has its 3 C's. It's about coordination, content, and communication. It integrates all that so that you as a team no longer work in a silo. You can work across the platform. And we're going to come to why that's quite interesting in a minute, okay? So this is what is quite interesting for me right now, is that it's a company that's growing very, very fast. Okay, so it's a Class A management team, and it's a co-founder of Facebook, and it's very, very interesting. Okay, so amazing management team. They're very much focused on the land and expand strategy. So you can see here that they're still growing at a very fast rate of 61% last quarter, and they give you very strong visibility for all the way until the end of their fiscal year, which is fiscal 22, to be growing at a 50% growth rate. So it's very compelling that, okay? The one blemish that I find is that the company, although it's growing on the top line very fast, is not really getting scale and giving that path to profitability. Its profit margin is around 40% negative, so it's not really anywhere near, that's including stock-based compensation being added back, so it's not really anywhere near even breaking even anytime soon. So that is something that I'm kind of want to put out there. Although I'm quite attracted to this company, I think that that's something that we can put out there and you can discuss and think about. Another thing that I find quite interesting that I will talk to you before about, I said this is something that I'm quite passionate about, is that it has a very high net retention rate. But particularly, you can see the figure here. So customers that spend approximately 5K per year, their dollar-based net retention rate is approximately 123% year over year, 123%. Whereas the bigger cohorts, the bigger enterprises, the dollar-based net retention rate is 140%. That means that when they do the land and expand, not only do those customers stay on for another year, they're actually being able to being upsold by 40% new products. So that's really compelling. So you have more customers coming on the platform and upselling towards the platform. So you got those very strong network effects happening here. That's really compelling. So if I look far and wide, so I take this estimate, okay? So let's say the company hits their growth rate of growing 50% this year, and next year that they decelerate, so the revenue growth rate next year is only 35%. So it's a drop from 50% year over year to 35%. So there's a slight deceleration. I'm taking that on board. So the revenue in that case would be 460 million. For a company that's priced at 5 billion market cap, that puts it on approximately 11 times forward sales. That's quite cheap in the SaaS world. So I kind of went to another workflow company and I took ServiceNow. So ServiceNow is priced at approximately 14 times its next year's revenue growth rate, and it's growing at approximately 25% compounded annual growth rate. So it's growing slightly slower and it's priced at approximately a bit higher, 3 times higher, at 14x forward sales. I took Smartsheet as well. Smartsheet is growing very similarly to ServiceNow at approximately 25%, and is priced approximately the same as Asana. So these two companies are slightly more expensive than Asana, despite not having that growth rate that Asana has. So just to summarize, I think the company is doing really great things. It's growing very fast. The one blemish that I consider is that its path to profitability is still some time away. But anyway, don't forget to check out my marketplace on Seeking Alpha. It's called Deep Value Returns. I'll tell you stocks I own and why. See you soon.